Hi, welcome back. On August 12th, the Mexican mining company called Endeavour Silver watched one of its most important mines go completely silent, not because of a mechanical failure, not because of falling prices, but because a local community blocked the road in and shut the whole operation down. And here's the number that matters, the one I want you to hold on to for the next several minutes, because we're going to come back to it. This mine, called Terranara, was supposed to be one of the assets that helped ease a silver market that's already been running tight for years. By the end of this video, you'll understand exactly why a single blockade at a single mine in Jalisco, Mexico, is being watched so closely by traders and why the resolution of this situation, however it plays out, could tell you something important about where silver goes from here. Before we get into the mechanics of it, let's make this personal for a second, because it's easy to hear mine shut down in Mexico and file it away as background noise that doesn't touch your life. But if you own physical silver ETFs, mining stocks, or you're simply watching your retirement account move alongside precious metals right now, supply disruptions like this one are part of the reason prices swing the way they do. Silver isn't just a shiny metal people buy when they're nervous. It's an industrial input, a monetary asset, and a commodity with a genuinely tight physical supply chain. And when a piece of that chain gets interrupted, even temporarily, it ripples outward in ways that eventually show up in your account balance. Whether you're holding the metal directly or just watching the price move on a chart. So here's what's actually happening. Endeavour Silver, which trades on the New York Stock Exchange and the Toronto Stock Exchange, operates Terranara as its flagship mine in the state of Jalisco. This wasn't some minor side project. Terranara was the company's big growth story, the mine that was supposed to push Endeavour toward becoming a much larger silver producer. And then, starting on August 12th, members of a nearby ejido community, that's a form of communal land ownership common in rural Mexico, set up a blockade on the access road. According to the company's own public statements, the community's concerns center on road maintenance, medical, and communication support, control over and access to the local water supply, and requests for increased financial assistance. Endeavour has called the blockade illegal, but here's an important detail that's easy to miss in the noise. The company itself has repeatedly described it as peaceful, orderly, and respectful. This isn't a violent standoff, it's a negotiation happening in slow motion with a mine sitting idle in the middle of it. Now here's the part most people scanning headlines are going to miss. The mine hasn't been abandoned. A reduced staff remains on site to handle safety and security, and the property is still accessible for maintenance work. Endeavour has said it's in active, ongoing discussions with community representatives, and as of the company's most recent update, those talks are being described as cordial. There's no dramatic collapse here, no walkout, no violence, just a mine that produces real ounces of silver sitting quiet while two sides work out a set of local infrastructure and financial demands. But quiet doesn't mean irrelevant. Every day this mine stays offline is a day of planned production that simply doesn't happen, and in a market this tightly balanced that matters more than it might, in a market flush with excess supply. Let's break this down with an analogy, because the mechanics of a physical commodity market can feel abstract if you've never thought about where silver actually comes from. Picture a busy restaurant that's already running close to capacity every single night, with reservations booked out weeks in advance. Now imagine one of its regular food suppliers, not the biggest one, but a meaningful one, suddenly can't make deliveries because the road to their farm gets blocked. The restaurant doesn't shut down. It has other suppliers, existing inventory, ways to adjust. But if that blockade drags on, and if a few other suppliers are also having their own separate problems around the same time, the kitchen starts feeling the squeeze in a way it wouldn't if it had plenty of slack in its supply chain to begin with. That's roughly the position the silver market is in right now. Not desperate, not collapsing, but tight enough that disruptions, which might get shrugged off in a looser market, actually register. Here's where it gets interesting, though, and this is the part that connects back to that number I asked you to hold on to earlier. Silver has been trading recently in the high 60s per ounce, a level that would have sounded almost unbelievable to most investors just a couple of years ago. And it's gotten there partly because the market has been dealing with a structural supply deficit, meaning global mine production and recycling haven't been fully keeping pace with total demand from investors, industrial users, and jewelry manufacturers combined. Silver isn't purely a monetary metal the way gold largely is. It's baked into solar panels, electric vehicle components, semiconductors, and a long list of electronics, which means industrial demand keeps pulling on the same limited above ground and mined supply that investors are also competing for. So when a mine that was specifically counted on to add meaningful new supply to that tight balance gets knocked offline, even temporarily, it's not a minor footnote. It's a data point that traders and analysts are watching precisely because it touches the supply side of an equation that's already stretched. Let's also talk about the scale of what's actually at stake, because context matters more than the raw headline. Terranara wasn't a small exploration project sitting years away from producing anything. It reached commercial production status not long ago, ramping up to run at roughly 2,000 tons of ore processed per day, with grades that make it a genuinely meaningful contributor to Endeavor's overall output. Not a token asset, but one of the pillars of the company's growth plan for this year and beyond. That's precisely why the market pays attention when it goes quiet, even for a matter of days. A shutdown at a small marginal operation might not move the needle much. A shutdown at a mine that's central to a company's production profile is a different story. It's also worth pausing on why Mexico specifically carries so much weight here. Mexico is the largest silver-producing country on the planet, responsible for a substantial share of the world's mined output year after year. That concentration is efficient when everything runs smoothly, but it also means the entire global supply chain has real exposure to whatever happens on the ground there. Local politics, community relations, water rights, infrastructure gaps in rural areas, and the kind of negotiation we're watching unfold at Terranara right now. This isn't a criticism of Mexico as a mining jurisdiction. It's simply a structural reality of how concentrated global silver production actually is. Now, I want to be careful here because it's tempting to turn one blockade into a dramatic story about an impending crisis, and that wouldn't be honest. This is one mine at one company dealing with a localized community dispute that companies operating in Mexico have navigated before, sometimes resolving within weeks. Endeavour Silver still operates other producing mines in Mexico and Peru, and Terranara itself remains physically intact. The ore body hasn't gone anywhere, the equipment hasn't been damaged, and the moment an agreement is reached, production can resume. So if you're picturing some kind of permanent loss of supply, that's not what the evidence in front of us actually shows. What it does show is a real near-term reduction in output from an asset the market had been counting on, layered on top of a supply picture that already had very little cushion in it to begin with. But here's the part most people watching the price chart alone are missing. It's not really about this one mine in isolation. It's about what this situation represents. Silver mine supply, globally, is concentrated in a relatively small number of countries and a relatively small number of major producing assets, and Mexico happens to be the largest silver-producing country in the world. When operational risk shows up at a flagship mine in that country, whether it's a community blockade, a permitting delay, a labor dispute, or anything else, it's a reminder of just how little room for error exists in a supply chain that was already running lean before this specific incident started. That's the real story here, more than any single number on a single day's chart. It's also worth acknowledging the other side of this, because a balanced view means looking at where this could go wrong for the bullish case, too. Blockades like this one, historically, tend to get resolved through negotiation rather than dragging on indefinitely. And Endeavour has both the incentive and the legal standing to push for a resolution relatively quickly, since every week of lost production directly affects its own revenue and its relationship with investors. If the community's demands around infrastructure and financial support get addressed and the road reopens, this entire episode could end up as a short-term blip that barely shows up in annual production figures. Markets sometimes price in disruption risk that never fully materializes, and if you're making decisions based on the assumption that every mine disruption automatically means higher prices forever, you're setting yourself up for disappointment when situations like this resolve faster than expected. This is exactly why I'd encourage you to hit subscribe if you want to keep tracking how situations like this actually play out, rather than just reacting to the initial headline. Let's pull the camera back for a moment, because the demand side of this story deserves just as much attention as the supply side. Even without any mine disruptions at all, silver has been dealing with rising industrial consumption from sectors that didn't exist at meaningful scale a couple of decades ago. Solar panel manufacturing alone consumes a substantial and growing amount of silver every year, because it's one of the most efficient conductors available for that kind of technology. Add in electric vehicles, which use more silver per unit than traditional gasoline cars because of their electronics and battery management systems, along with ongoing demand from semiconductors and general electronics manufacturing, and you start to see why the just industrial metal framing undersells what silver actually is. Layer investment demand on top of that. People and institutions buying coins, bars, and silver-backed funds as a hedge against currency debasement or economic uncertainty. And you get a market where two very different types of buyers are competing for the same limited pool of metal. A supply disruption landing in the middle of that dynamic isn't happening in isolation. It's happening at the exact point where the market has the least room to absorb it comfortably. So, let's resolve that open loop from the start of this video. I told you Terranara was supposed to help ease a silver market that's already been tight for years. And that's the mental framework I want you to walk away with. Every time you hear about a mine disruption anywhere in the world, the question worth asking isn't, is this a crisis? It's, how much slack did this market have before the disruption happened? In a market with abundant supply and comfortable inventories, a single blockade barely registers. In a market already running a structural deficit, with industrial demand climbing and very little spare capacity sitting on the sidelines, the same disruption carries real weight, because there's nothing absorbing the shock. That's the lens that actually matters here, more than any single headline or any single price level. Think about what this means for you directly. If you hold physical silver or silver-related investments, situations like the Terranara blockade are a reminder that the physical supply side of this market is genuinely fragile in a way that doesn't always get priced in smoothly or immediately. It doesn't mean panic, and it doesn't mean rushing into a purchase you haven't thought through. This channel never tells you to buy or sell anything. What it does mean is understanding that the silver market you're participating in isn't some infinite frictionless pool of metal. It's tied to specific mines, specific communities, specific countries, and specific logistical realities. And those realities occasionally surface in ways that move prices. Knowing that context helps you interpret headlines with a clearer head instead of either dismissing them entirely or overreacting to every single one. Looking ahead, there are a few realistic paths this could take. Negotiations could conclude in the coming weeks with the community's demands met and Terranara ramping back toward full production, in which case this becomes a relatively contained event in Endeavour's operating history. Alternatively, if talks stall, the disruption could extend longer, tightening the supply picture further at a moment when the broader market is already digesting elevated prices, a softer dollar, and shifting expectations around interest rates and bond yields. Neither outcome is guaranteed, and anyone telling you they know exactly how this resolves is guessing. What we do know is that the situation is being actively monitored, that the company continues to describe its discussions with the community as constructive, and that markets will likely respond in real time as updates come out. Before we wrap up, here's the forward-looking piece I want to leave you with, because this Terranara situation doesn't exist in a vacuum. It's unfolding at the same time silver has been pushing toward multi-decade price territory, driven by a mix of safe haven demand, a weaker dollar, and questions about how central banks and governments manage debt and interest rates going forward. In the next video, I want to dig into that broader macro picture, specifically how shifts in Treasury policy and bond yields are feeding directly into precious metals right now, and what that combination could mean as we move deeper into the second half of the year. If a single mine blockade can move the conversation this much, imagine what happens when several of these pressures line up at once. That's exactly what we're going to unpack next time, so keep an eye out for it, and I'll see you in the next one.